Well friends, I welcome you all in this series of lecture on hire purchase accounts. So, when we discuss about the hire purchase accounts, I have already made it very clear that recording the transaction under hire purchase system is as simple as in case of other accounting system. Simply we have to see that the transactions which are recorded under hire purchase accounts need to be very clear. So, here when we discussed about the system of maintaining accounting record related to hire purchase transactions for goods of substantial sales value. So far we have discussed the accounting procedure, the accounting treatment of all those transactions which are of substantial values. But we all know that in practice the goods bearing small values like fridge, television, scooters, etc. are also sold on hire purchase basis. So, the retailer often keeps separate records for these transactions and compute the profit on hire purchase business separately. So, now from this lecture onwards, we will study how the transactions are recorded under hire purchase system in case of product having small values. So far we have discussed the accounting treatment of transactions under hire purchase systems of substantial value of the products having substantial value. But now we will study how the accounting treatment is made for the products which are of less value, which are of small value. This involves a peculiar method of accounting and ascertainment of profit. In this we shall also discuss the accounting treatment of hire purchase transactions for goods of small value and study the methods of ascertaining the profit or loss on such transactions during the accounting period. First one is default and repossessions. So, what actually we mean by default and repossession? So, default is the failure to act or pay, that is failure to meet the obligation. So, if I am supposed to make the payment, say for example at the end of the first year, or if I am supposed to make the payment of annual installment at the end of every year. So, if I do not make the payment at the end of the first year, it means I am making a default. So, here when I am not fulfilling my commitment, it means I am making a default. Under the hire purchase agreement, the hirer has obligation to pay up to the installment so that the ownership of goods smoothly passes to him. If he fails to meet this obligation, it will be treated as default on his part. So, it is very simple. When we do not make the commitment successfully, when we do not fulfill our commitment successfully, this is what we call default on our part. Possession of goods means physical holding of goods. Dear students, we know that under hire purchase agreement, the vendor simply transfer the possession of goods. He does not transfer the title of the goods, and if the hirer fails to pay even the last installment, the vendor has every legal right to recover the possession of the goods. So, in such a case, when the hire purchaser do not fulfill his promise, do not fulfill his obligation, hire vendor has every right to recover the possession of the goods. This act of recovery of possession is termed as repossession. Rights of hire vendor. So, let us discuss what are the rights of the hire vendor. So, the first one is rights of hire vendor to terminate hire purchase agreement. So, in case where the hire purchaser fails to fulfill his commitment, in that case the hire vendor has all rights to terminate the hire purchase agreement that had already taken place between the hire purchaser and the hire vendor. Hire vendor shall be entitled to terminate the agreement by giving the notice of termination in writing. So, in such a case, the hire vendor will write to the hire purchaser in writing that you could not fulfill your promise, therefore, I am terminating this agreement which was taken between you and me. Then the second one is rights of hire vendor on termination. So, where a hire purchase agreement is terminated, the hire vendor, that is the owner of the goods, shall be entitled to. So, for what he will be entitled, let us now discuss in detail. The first one is to enter the premises of the hirer and seize the goods. So, in case if the hire purchaser do not fulfill his commitment, in such a case the hire vendor has right to enter to his premises to seize the goods. Then the next right of the hire vendor is to retain the hire charges already paid and to recover the arrear of hire charges due. So, in such a case the hire vendor has all rights to recover from the hire purchaser as far as the hire charges are concerned and as far as the arrear of the hire charges due are concerned. Then the next one is to claim damages for non-delivery of the goods. So, in case the hire purchaser do not make his promise fulfilled, in such a case the hire vendor has now every right to claim for the damages of the product in case if the product is not delivered to him. Now, the accounting treatment for default and repossession. So, in case when the hire purchaser do not fulfill his commitment, in such a case how the accounting transactions are recorded in the books of the hire vendor, we will study these things in the coming lectures. We know that when the hire purchaser fails to pay any of the installment, the hire vendor can take back the possession of the goods. The amount already paid to the vendor as a part of the payment for the asset is treated as hire charges. So, whatever amount the hire purchaser has already paid so far, so such payment would be treated as hire charges for the product used by the hire purchaser. So far as the repossession of goods is concerned, the vendor can either take back the whole of the asset or a part of it. So, it is now the prerogative of the hire vendor whether he wants to take the full amount of assets back or he takes the part of the assets back. Let us now discuss what entries will be passed in case of complete repossession, and second situation is in case where a partial repossession has taken place. So, first one is complete repossession. So, when the hire purchaser do not fulfill his promise, in that case if the hire vendor has taken a decision to take the entire goods back, then how the accounting treatment will take place, what journal entry would take place, we will discuss. When the hire purchaser do not pay the installment, the vendor can take back the possession of the goods. In case vendor takes the possession of all goods, it means when he completely takes the goods back, it is called complete repossession. It means vendor will close the hire purchaser accounts in his book, because now he has decided to take the entire goods back. Therefore, he would like to close the account of the hire purchaser in his books, and vice versa. The journal entry passed are as follow. The first one is, all the entries except the entry for payment are passed as usual up to the date of default. So, up to the date of default, whatever general entries were supposed to be passed in the books of the hire vendor, all entry would be recorded in the same way up to the date of default, except the entry for payment. Now, for closing the accounts of the hire purchaser. So, on account of not fulfilling the promise, and the hire vendor has taken a decision to take the entire goods back. Therefore, in the books of the hire vendor would like to close the accounts of the hire purchaser. So, in order to close the accounts of the hire purchaser, the following journal entry would take place: goods repossessed account debit to hire purchaser, because here the goods is coming in, here the product is coming in. Therefore, as per the rationale of the real account, debit what comes in. So, here the asset is coming in, therefore, the goods repossessed account will be debited, and hire purchaser account is the personal account. So, we will apply the rationale of the personal account, debit the receiver and credit the giver. So, it is the hire purchaser who is giving the goods back. So, therefore, his accounts must be credited. Third one is for repairs and other expenses on the repossessed goods. So, when any repair amount is spent on the goods repossessed, then the following journal entry would be passed: goods repossessed account debit to cash for repair and other expenses. Because when we will make the payment for getting something repaired, of course, the cash will be gone out from the pocket, and cash being an asset comes under the real account, and as per the rationale of the real account, debit what comes in and credit what goes out. So, here the cash is going out, therefore, cash account has been credited. And here why did we debit the goods repossessed? It is very simple, because we have incurred the expenses for making the goods more valuable. So, here the value of the asset is going to be increased. Therefore, in order to increase the value of the assets, asset account has always a debit balance. Therefore, asset account need to be debited. Then for resale of goods repossessed. So, very simple, when we have repossessed the goods and now taken a decision to resale of the goods. So, in such a case, the cash will come to us. So, as per the rationale of the real account, debit what comes in. So, here the cash is coming in, therefore, cash account has been debited, and again the goods repossessed, that is the asset. So, this is also a real account. So, as per the rationale of the real account, debit what comes in and credit what goes out. So, here anything which is going out. So, here the goods repossessed is going out, therefore, accounts of goods repossessed is credited. Any balance left in goods repossessed account is either profit or loss. So, when we dispose of the balance of the goods repossessed, either we will incur a loss or we will incur profit. So, in case of profit or loss, what journal entry would be recorded? It is very, very simple. In case of profit, the entry would be goods repossessed account debit to profit and loss, and if it is a loss, the entry would be reverse. It means profit and loss account debit to goods repossessed. If there is a loss on account of making a resale of the goods repossessed by the hire vendor. In the books of the hire purchaser. So, this was all in the books of the hire vendor. Now, in the books of hire purchaser, what sort of journal entries the hire purchaser will make? So, again it is very simple, all the entries except the entry for payment are passed as usual up to the date of default. So, up to the date of default, all journal entries which were supposed to be passed in the books of the hire purchaser will remain the same. So, why we are writing here except the entry for the payment, because here the hire purchaser is making the default, he is not making the payment. So, therefore, in order to leave this transaction of making payment for closing the accounts of the hire vendor. So, here the hire vendor has already taken a decision to take the entire goods back. So, therefore, the hire vendor will close the accounts of the hire purchaser, and the hire purchaser would also close the accounts of the hire vendor. So, he will make the journal entry hire vendor account debit to asset, because hire purchaser is returning the goods to the hire vendor. So, he will debit the hire vendor, because hire vendor account is a personal account, and as per the rationale of the personal account, debit the receiver. So, it is the vendor who is now receiving the asset, therefore, his account has been debited, and asset account is the real account, and as per the rationale of the real account, debit what comes in and credit what goes out. So, here the asset is going out, therefore, the asset account has been credited. Then the next one is foreclosing the asset account. So, it is very simple. When we are returning the assets to the hire vendor, so we will make the asset account close. So, for that the journal entry would be profit and loss account debit to asset. So, when we are returning the asset, of course, either we will have a profit or loss on account of returning the assets to the hire vendor. So, this journal entry is in case where there is a loss on account of returning the asset to the vendor, profit and loss account debit to asset. Now, we would like to understand the implications of this with the help of an example, with the help of an illustration. So, on January 1st, 2017, ABC Limited sold some plant and machine costing rupees 28,000 cash price to XYZ Limited. So, here XYZ Limited is the hire purchaser and ABC Limited is the hire vendor. Payment was to be made as rupees 7,500 as cash down payment and 3 installments of rupees 7,500 each at the end of each year. Rate of interest is 5% per annum, rate of depreciation 10% per annum. XYZ Limited made the down payment and paid the first installment, but could not pay the second and third installment. Consequently, ABC Limited, that is the hire vendor, repossessed the goods. He decided to take the entire goods back and spent rupees 300 on repairs and disposed of the assets for rupees 15,350. Open ledger accounts in the books of both the parties. So, first in the books of XYZ Limited, it means in the books of hire purchaser. So, hire purchaser will make two accounts, asset account and the vendor account. So, this is the asset account and the second one is the ABC Limited is the hire vendor. So, first we will discuss this hire vendor account and then we will discuss the machinery account. That will make the questions, that will make the process more simple in order to understand. So, here in the books of hire purchaser, so hire purchaser made down payment to the hire vendor. He made the entry ABC Limited account debit to cash. So, to cash 7,500 and he has made the sale of the asset. So, here the entry was ABC Limited plant and machine account debit to ABC Limited. So, in the books of ABC, in the accounts of ABC Limited, it is buy plant and machine 28,000. So, at the end of the first year, the first installment was also made of rupees 7,500. So, here the plant and machine was 28,000, down payment was this 7,500. So, at the end of the first year, the outstanding amount was 20,500. So, on 20,500, the rate of interest was 5%. So, here the amount would be by interest 1,025. So, 5% of 20,500 500, by interest 1025. So, then at the end of the first year, the first installment was made again 7500. So, this is the closing balance carried down 14,025. This is the balancing figure. So, total is 29,025, total is 29,025. So, this balance of rupees 14,025 at the end of the first year will be brought forward, by balance brought down 14,025. Now, interest on this amount 14,025 at the rate of 5%, it comes to 701. So, here by interest 701, total is 14,726, and here the entry in the books of hire purchaser would be ABC limited account debit to plant and machine 14,726. So, this is the entry in case of default where the hire purchaser could not make the payment. So, this is the balancing figure also 14,726. Now, we can, so here in the case of default, the entry which was made by the hire purchaser was ABC limited account debit, that is the hire vendor account debit to plant and machine. So, when we will prepare the plant and machine account, so it would be by ABC limited. We can easily see in the books of plant and machine by ABC limited this entry 14,726. So, let us discuss in the books of hire purchaser plant and machine account. So, in the books of hire purchaser, when the asset was purchased, machine account debit to ABC limited 28,000 because the cash price was 28,000. Then by depreciation 10% of 28,000, 2,800. So, by balance CD at the end of the first year 25,200, total is 28. So, this balance we will brought down in the beginning of the second year 25,200. So, by depreciation at the rate of 10%, that is 2,522, and here in case of default, see the journal entry was ABC limited account debit to plant and machine. So, in the plant and machine account by ABC limited 14,726, which we have already determined the account in the in ABC limited account. So, by profit and loss, this is 7,954, this is the balancing figure. So, the total is 25,200, 25,200. Then the next one is now in the books of ABC limited. It is very simple. ABC limited is the hire vendor. So, hire vendor will prepare first hire purchaser accounts. So, here he made the entry hire purchaser account debit to sales 28,000, and he made the journal entry for the interest XYZ limited, that is the hire purchaser account debit to interest 1,025, because out of 28,000 the down payment was made 7,500. So, at the end of the first year the outstanding amount was 20,500. So, if we calculate the interest at the rate of 5% on 20,500, the amount comes to rupees 1,025. Then at the end of the first year, the first installment was also paid rupees 7,500. Now, this is the balancing figure 14,025, total is 29,025, 29,025. Now, this balance at the end of the first year will be brought forward, two balance brought forward 14,025, that is 14,025, and here by goods repurchase. So, we made the entry in the books of hire vendor goods repurchased account debit to XYZ limited. So, in the books of XYZ in XYZ account by goods repurchased 14,726, and here at the end of the second year for interest to interest 701 on 14,025, this is 701, total is 14,726, 14,726. Next one is goods repurchased account. So, goods repurchased account, we made the entry goods repurchased account debit to XYZ Limited, because XYZ Limited had returned the goods. Therefore, the person who is returning the product must be credited. So, we made the entry goods repossessed account debit to hire purchaser. So, XYZ Limited is the hire purchaser, 14,720 we have already calculated. Now, the hire vendor spent rupees 300 on repair. So, the entry would be goods repossessed account debit to repair to cash 300, and here after making the repair, the hire vendor disposed of the goods against rupees 15,350. So, we made the entry cash account debit to goods repossessed account by cash 15,350, 50,350. So, out of 15,350, if we subtract these two things, then this is the net amount of profit or loss. This is the net amount of profit which the hire vendor has gained on account of transferring or on account of repossessing the repossessed goods, 15,350. So, this was all about this lecture on repossession of goods in the books of the hire vendor and in the books of the hire purchaser. So, I am very sure that this entire process has made the mind of the learner very clear as far as recording the transactions in the books of hire purchaser and hire vendor is concerned. Thank you very much.